Welcome to another episode of the Wealth Building Strategies podcast. I'm your host, Jeremy Constantino. Today, I have a super exciting guest that has joined us, Alex Escobar. Alex, welcome to the show.
I'm honored to be here. I'm really excited to be able to spend some time talking to you and your audience. Thank you for having me.
Excellent. So, where are you calling in from today, Alex?
I live just outside of Washington, D.C., in Alexandria, Virginia.
Excellent. All right. So, a little bit about you so that the audience can get to know you. Alex is a multifamily investor and host of a wonderful podcast called Screw the Stock Market. He's passionate about helping second generation immigrants and people of color to build and protect their wealth through real estate. So, well, let's jump on in. I want to talk about screw the stock market because that really excites me, and we can talk about that in this episode. But let's first talk about your background, and I guess if you're passionate about helping second generation immigrants, I guess does that apply to you as well?
Yeah, I think it's something I've seen a lot of times, new entrepreneurs and they're trying to develop who's my people, who are my customers that I'm trying to serve. And very common, most often people pick themselves a few years ago, right? and and that's the same for me, right? I look around at my circle of friends and the most people in my network, and I see this trend of who's my people. And really it's not even, I'm an immigrant from Honduras. I grew up here in the US most of my life, so really the real immigrants are my parents.
Wow.
But more than that, it's actually immigrants from other countries, right? And I just see that there's this common culture that we all have of being in between two cultures, having to go back and forth and help our parents navigate life in the US and having to explain things about that are in our culture. And we've seen our parents struggle and sacrifice so that we can have a better life. So I keep seeing this trend that this group are people who come and they don't want to allow that sacrifice that our parents made to go to waste. And so we
Yeah.
come and we're really driven to succeed. People come, they go to school, they get their graduate degrees, they go on to become lawyers and doctors, and they get that good job and they get that success. And I see that around my life and my network. But then too many of us, we get stuck in, okay, well, now I got that job, and that's the highest level of success that most of us have been trained to attain.
Right.
But really there is.
So were you born in Honduras?
I was born there, and 3 months later I came to the US as a
Oh,
baby.
okay. Well,
And so pretty much, it's funny, I always tell people I never feel more American than when I go to Honduras, because when I'm in the US, I feel pretty Honduran, right? I'm a Honduran American, right? When I go to Honduras, oh wow, I'm very American. And it's just like part of that. I feel like an outsider in both places, but I feel like an insider in both places too. It's just a
yeah.
funny
So
byproduct of it.
my dad was born in Puerto Rico, and my mom was born in Mexico, and they got married in Puerto Rico. Or my mom's family moved from Mexico to Puerto Rico when she was young, and my mom and my dad met in high school. They got married, and my dad and my mom, right after they got married, they moved from Puerto Rico to Midland, Michigan. So they moved from a tropical island all the way up north. So I don't know what it is about the Latinos. For some reason, they're in Washington, D.C., New York, Michigan. I don't know why.
I think we
But
follow the jobs. I don't know. At least in my case, that's what I did. I remember seeing my dad. We lived in Miami first when we first came to the US, tropical, full of a very Latino place. And one of his friends gave him the Washington Post job section, which was like 30 pages long, compared to the Miami Herald job section, which was like, half of a page. And he said, "Okay, we're moving to DC." And so um, here we were, and thank goodness it worked out. He was able to provide a great life for us, a bunch of opportunities, a bunch of things that he didn't have. And so, in all senses, a real success story of immigration. And again, I definitely want to take that to the next level.
yeah, absolutely. Yeah, a little bit more about. Sorry, I'm kind of hogging the mic here. I know that you're my guest. You're my first guest that I've kind of opened up, and I've kind of told my story too. I haven't had the opportunity, and so yeah, my dad when he got to Midland, Michigan, his English was very, very poor, and he struggled in trying to get a job, and he was made fun of. He couldn't do his job well at all, and he had multiple different jobs. So finally, year after year after year, he finally learned English. It was very it was a tough challenge for my both of my parents getting acclimated, learning the language. And one thing that he did was that when he would drop me off to school, like he would drop me off to school in high school, he got the tape, Rich Dad Poor Dad, the cassette tape when Rich Dad Poor Dad came out, 1994, 95. I forgot what year it was. But he instinctively knew. He's like, Jeremy, this is how you're going to get out of the rat race through real estate, through investing. And so he put that the seed inside me in high school. So I had to learn the language, and he wanted to set me up for success. And then now, looking back, it's like, um, it's exactly what you were saying. Like with a second generation immigrants, we want to really achieve and really want to do well and get into investing.
How beautiful. That's really exciting to hear. I have a very similar one. My dad got me the Carlton Sheets no down payment cassette
Oh,
tape
okay,
when I was like 17.
there you go.
And same thing. And the interesting thing about that is that at the time I was convinced I was going to make it to the NBA because I remember going to the doctor and they used the little extrapolation tool, right? Oh, you were this tall that last time, now you're this tall. If you continue at this pace, you're going to be 6'7" by the time you're a fully grown adult. 6'7", okay, that's it. I'm going to the NBA. I don't care about real estate. I don't care about any of that. Um, but uh, it still planted the seed, and I watched it. So that's a really awesome story that we can kind of share. Our
Yeah,
parents do
absolutely.
want us to have that next level of success. And
Excellent.
so,
Yeah. So now, how did you get into real estate?
so I mean, that was really the Carlton Sheets thing. Definitely planted the seed of that idea. And I remember, when I spent some time abroad in Honduras with a nonprofit organization after graduating from business school, and I first came back to the U.S. 2010, 2011, and it was after that whole recession and stuff, and I was looking for a job, for career, for ways to, and I wanted to flip a house. That's all you think of when you think of real estate investing is HGTV, flip a house, right? That's all I thought there was. And it takes money to do that. I didn't, so I just didn't know how to do it yet. I ended up finding a great job, which was actually my dream job. I was in the federal government in the world of international development, helping to issue contracts and grants for the US to implement programming to help democracy around the world. It was awesome. Really a great job. Uh, but in the long run, I always knew I wanted something entrepreneurial. And I got passed over for a promotion. I kind of took it up. I said, they don't think I'm ready, but I think I'm ready. And I'm just waiting around for someone else to either retire or something for another opportunity. And I said, no, I'm not going to sit around and wait another 5 years, or even worse, like to wish harm upon someone. Oh, I wish that person would croak so that their position. I don't want to think like that. So I said, no, I'm going to go out and get my own promotion. And I went and became a dual career real estate agent. And since I live in the DC area, and we have three areas: DC, Maryland, and Virginia. My first license was in Virginia, and I think it was my second client who said, "Oh, well, it's a little more affordable in this neighborhood in Maryland." And I didn't have my license yet, so I said, "Okay, I got to get all three licenses." And I did. I started to sell houses and do commissions as a dual career agent, and it was really good because the DC area is a relatively expensive place to live, and all of a sudden, as a realtor, that's a good thing for me because those the percentage commissions are now coming as a percentage of a higher number. And so I was selling houses, but I always thought that, hey, if I'm a realtor, that'll give me an inside track to be able to become an investor. And you know maybe 5 years before I realized I don't really think I'm getting much closer. I'm getting better at marketing, I'm developing skills, but not really. Just the way I'm spending my time and energy isn't really getting me access to deals or money to be able to do this. And so I just really dove into podcasts. I dove into my education. I dove into books. And the first action step that I really took beyond that, beyond the learning phase, was to buy a second home. And I kept my first home, and okay, now I'm a landlord. Now I'm an investor, right? And it was good. It was cash flowing, and it was great. But then I had to save up again for another 5 or so years before I'd be able to have the next down payment. I knew I wasn't doing something right, but I still didn't know what I could do. So I just said, okay, well, I'll just keep focusing on my education and learning as much as I can and going to these networking events. And eventually I came across one of those online gurus who talks about apartment syndication. And so you mentioned that a group of your audience are realtors. And this really resonated with me for two reasons. First, as a realtor, one of the things that I already had was a database of contacts. I was keeping in touch with them through a CRM, and I was seen in their eyes as a real estate expert. And I said, okay, cool. And as I read through this book on how to buy apartment buildings without your own money, is a way of doing that with syndication. I said, okay, I'm about halfway there already. So let's explore this path a little bit further. There's all these advantages of scale and being able to buy a bigger asset than you could afford yourself, and bringing on partners to be able to help you cover the things that you don't need. And all of a sudden, my whole world expanded beyond my own capabilities, beyond my own money, beyond what I thought was possible. And I said, I could go out and buy a 100-unit building today if I wanted to, if I could bring on the right partners and the right skills and the right team. Wow. Okay. So now all of a sudden, I didn't have to wait 5 years to go out and buy another single family house. Um, and that was it. So I started to shift the conversations that I was having with my network from, hey, if you're interested in buying and selling a home, I'm your guy. And I just add, if you're interested in buying or selling or investing, let's have some
Nice.
conversations about it.
Excellent. Excellent.
And before long, I had soft commitments, which is just someone saying, hey, if you find a deal that kind of meets this general criteria, I'm good for 50,000. I'm good for 100,000 bucks.
Awesome.
And before long, I had 600, $700,000 of soft commitments. I said, okay, with that, I can go out and buy maybe a $1 million or $2 million apartment. I took that soft commitment and I stopped really focusing on that, and I went shopping. I started negotiating and analyzing and negotiating and analyzing and making offers, and uh, couldn't find a deal that was cash flowing. And I had someone from one of these podcasts, and I actually picked up the phone and I called him and I said, hey, I'm stuck. I'm doing everything you said to do, but I'm stuck. And all he said was, you're on the right track, but focus a little bit more on networking, because right now you're still trying to do everything yourself. You're trying to raise the money yourself. You're trying to find the deal yourself. You're trying to close it yourself. As you network more with your peers and other active investors, I think you're going to find the pieces fall into place. And sure enough, that happened. It was about 9 months later. I got the call from one of the guys that I had been networking with here locally in the DC area. We sat down, met face to face, had coffee together, and just kind of kept in touch. And then he said, Alex, I got a great deal. You want to partner with me and help me raise money and manage the asset together? I said, yes, okay. And then I spent some time. I did my due diligence on him. I did a background check. I did all these kind of like, okay, let story check out. Is this real? But it did, and it was. And we bought our first apartment building in January 2021, 26-unit building, brought on 3 investors. That was enough to take down the apartment. And great. We're actually starting to explore the possibility of selling it now. And it looks like we're on track to exceed what we had projected for those investors. And so now I'd like to share, if it's okay, a little bit about the way these deals are structured from the perspective
Absolutely.
of a
Absolutely.
passive investor.
Yeah, I just want to
Oh,
interject
sure.
here. There's a lot to unpack on your story there, and you hit the nail on the head with talking about as a real estate professional yourself, you knew the importance of investing in real estate. You're a real estate agent and you're selling homes to retail clients, and in the back of your mind, you're like, I need to invest myself. And but you hit the nail on the head by saying I have to come up. with all this down payment. And if I do one, then I need to save up more and do more. So you hit a pain point on the nail on the head of probably the majority of the real estate agents out there. They want to get into real estate investing, but they know they can't they can't afford having a portfolio of rental homes, let alone even get into commercial real estate. And so you just outlined the secret way of doing that, and that's by networking and by the syndication. So go ahead and talk about syndications and what is a syndication, and unpack that for, because we'll probably have some real estate agents listening to this episode.
Okay, wonderful. So yeah, so syndication is a fancy word, and I always actually try to, use plain language as much as possible, which really all it is, it's pooling money together to be able to buy something that the group can afford as opposed to what one individual can afford. Uh, so with so essentially we create an LLC structure, and the company, the LLC, is the one that will be buying the asset. And the LLC has two different member classes. One is the active investor or the sponsor, or what they sometimes call the general partner. And then the other membership class is the limited partner or the passive investor. And so, from the perspective of a passive investor, generally these are people who value their time. They might be making enough money to make an investment, but for example, I have a classic investor who's a close friend of mine. He's an orthopedic surgeon. He's working probably 70 to 80 hours a week, and he has three kids, and he's very busy. And so he said to me, he's like, all I have to do is give you money, and you're going to make it grow for me. Thank you. Yes. So he was thrilled by that.
Exactly.
I've had other people who, very close, they love me, we have good relationships. And then they've said, Alex, I will never invest in a syndication with you because I need to have control. I need to be involved day to day in what the decisions are. And so it's not for everyone. And so if control and being involved is something that is very important to you, then maybe a syndication might not be the best way to do it. Maybe you want to be involved in the active side. And there's, I'm happy to share a little bit more about what that's like. But I do also want to say that control is, I mean, if we're going to compare it, like the name of my show, Screw the Stock Market, for most people, that's the default investment. And you don't have any control over what's happening there. And I'll actually make the suggestion that you might have much more control over a passive investment with me, where you can pick up the phone and call me, but you're not going to be able to call Tim Cook or Elon Musk or anybody on the phone and say, hey, I don't like the way you're doing things. But you have a lot more influence over your team with a smaller structure like this. So that's, at least to compare apples to apples, you don't necessarily have control with the stock market. But if you are going to be investing actively yourself, maybe buying single family homes or even small multifamily homes, then yeah, that's an apples to apples comparison. And control is an important factor. And I understand that.
Yeah, I want to
So
go. I want to go back to what you were saying earlier, about the importance of having that good network. And so I guess you hit another pain point of a real estate professional, is the real estate professional may even see a good commercial real estate opportunity, but all of a sudden their pain is, oh no, I got to manage, an 80 unit multi-family place, or I have to manage this. Who am I going to do to manage it? um and so there's, as a real estate professional, real estate agent or broker, sometimes we could try to do everything. Like we want to get the commission on the buy side, but then we want to manage the property and get the commission from the property management, and then we want to list it also. So we want to try to get everything in, but we're not going to be able to peel back away from our real estate production. So it's the case that you just said, the doctor's working 89, 90 hours a week. The same thing for the real estate agent who's working through the weekends. They're trying, they're maybe doing two, three, four deals a month. And they like that. And they don't want to back away from that so that they can try to get the commercial real estate and be the buyer's agent on that, be the listing agent, because it takes a lot of time for that. So yeah, you have to network, and you got to get your team together and be like, okay, maybe as an agent, I'm okay with having you be the broker on the buy side and on the properties management and on the listing side. And I'm okay with just getting that passive income. But it's exactly what you said. That real estate professional now has such an amazing opportunity to influence the entire project and get on the phone with the team and say, hey, I was just looking at the comps myself, and I think the listing price should be this or that, and we can have this understanding um, in such a way that you'll never have with with the stock market.
Oh yeah, absolutely. Yeah, and I think maybe in real estate, maybe as realtors, we are even more guilty of that, right? Because we see those percentages and everything, but it's those are words of wisdom for any business, right? It's know your strengths and find ways to. I mean, one of the books that I have back here that I really love is called Who Not How, and it's all about that. It's essentially the idea that if you're always wondering how to get that next problem solved, there's always a rabbit hole of intricacy and subtlety in anything that we do in life. And so, as opposed to becoming a surface level person who can do a little bit of everything, really the success and the speed and the astronomical growth happens when you bring on experts who are able to do that. And so, even in our own business model in syndication, I'm making adjustments, continuing to do that even further, right? Where now I'm looking to partner with people who have very experienced asset managers, and it's there's I'm kind of going off on a little bit of a tangent, but there's essentially three main hats within the active role in a syndication team. And those three roles are asset management, the person who's going to actually manage the project and make sure that we meet our projections and do that. They often have construction experience or property management experience. There's deal finders who are often like kind of the engineer type minds who love spreadsheets and kind of finding deals and negotiating and that kind of skill set. And then the other skill set is the capital raising. And
Right.
so that's the role that I'm going to be focusing on more as
Right.
I continue to develop as a syndicator. And that's why I'm here today with you. So
Right. It's tough as a real estate professional because we could do all three of those roles. We're qualified to do all three.
yeah.
Okay, so let's talk. Almost running out of time here, but
Oh, wow. Okay.
let's dive in real quick. The title of your podcast, "Screw the Stock Market," and you know, some to some people like me, I'm like, yeah, of course. And that's exactly what I did. I this last winter, I had a big 401k built up with my career with Chevron Oil and Gas as an engineer. I had that saved up, and at the end of last year, that's exactly what I did. I said, "Screw the stock market. I am out." I rolled it all over to a solo 401k, and now I'm completely diversified passively into multiple different real estate syndication projects. So I did that. I had enough.
That's,
I said,
brilliant, by the way. That's
yeah,
great timing, dude.
had it. Screw the stock market, and like yeah, the went down, and so you don't lose money in the stock market until you sell. So I sold and lost some money, but I've had enough. So that for me, there's people like me out there that have had enough of the stock market and want to only get in real estate. So now, what would you say to the people that are listening to this and say, no, the stock market is safe, and the stock market, I have millions of dollars in it, and how Alex, how dare you tell me to screw the stock market? So I guess what would you say to them? How do you get them to say, go ahead?
Well, I guess first I'll say, again, from the perspective of marketing, it's a little bit of a polarizing name, which was done on purpose, right? I want this to attract people who have that distrust of those Wall Street fat cats and, that whole, that image of that dude with a monocle and a big cigar. Don't trust that guy. He's greasy. He's got his hair slicked back. He's trying to get you for everything he can. Right? And obviously it's imagery, it's marketing, it's I want it to polarize people because I want people to listen to the show who have that distrust. But um, at a very more kind of sincere place, I understand that there are people who've made millions in the stock market and have done way better than me, right? So I recognize that. And I do see that you're investing in real businesses who are out there providing real value. But I think for me, it all comes down to kind of one thing. I've even had people who are stock people come on our show, and we have the same value, that same distrust of the man, but they do it through the stock market and that kind of thing. Really, what I'm trying to get at is more of this message of the education that we're all taught about what investing is. The story comes from my first raise as a capital raiser. I had this deal. I thought it was great. It's a home run deal. And one of my closest friends said, Alex, your projections look good. It all makes sense, but I can't invest with you right now because I'm focused on investing for my retirement in my 401k. And that's where there was a disconnect because I said, well, if you believe that you can trust me, that the deal looks good, it all makes sense, and we're going to beat what you're making in a 401k without all the volatility, without all that ups and downs. And it's just because I realized in her mind, 401k is investing. That was the default. And that's really what I'm trying to say is really, if there's like a system, if there is a man, their message is that you're too dumb to handle your money. Give it
Yeah.
over to me and
Yep.
just trust me
Yep.
with it.
Yep.
Don't, think long term, put your money in here, forget about it for 30 years, and then hope and pray that by the time you need that money, that there'll be something left. And that's really the message that I say is really our show is about taking control of your finances and your future and your life, whether it's in the stock market or not, but it's about owning it and taking control. And whether it's and we don't always just talk about real estate. We bring on people who talk about different asset classes. We've had people talk about notes and crypto and um, uh, what are they called? The franchise business models, acquiring businesses like laundromats or uh, you know, there's all these different asset classes. We've had people come and talk about solo 401ks and ways of kind of unleashing the wealth that you've already worked for and you have it kind of trapped in this 401k. And then we always talk about kind of inspirational stories of people who have one guy I'm trying to get on the show. He's a friend from business school and kind of like you, he made that decision at the end of 2021. He said, his heart rate was going up and down because one day his net worth was in millions, and then the next day he'd lose a million, and then the next day some crap would happen in the news, and he was rich or poor, and it had nothing to do with the real value that these companies were producing. It was just the market is this emotional thing, and to ride along and to have your life depend on this roller coaster sucks. So he did exactly what you did. He pulled all of his money out and bought as much real estate as he could independently. He didn't even do it through syndications. And now he's at a point where his big savings were pretty much tapped out, and now he's ready to start investing in syndications at smaller amounts, right? 50, 100,000 here or there. Um, but I hope I answered your question.
Oh
That's what
yeah.
the show's all about, and that's why we picked the name. Yeah,
Yeah, I love it. The you hit the nail on the head again, and it's the third time I've said that, but it's true. The reason why you have a podcast, reason why I have a podcast, the primary reason is education. We're here to educate and to basically give the red pill. It's like
yeah,
you want to keep living in fantasy land, you take the blue pill. If you if you want to realize the truth, then take the red pill and listen to our podcast. But that's reading the books and listening to the podcast, and you're in control. The listener, you are in control of your destiny and your future. And just because you grew up and the world out there and the media says, oh, well, you need to put in your 401k, and you need to at least match what your company is, and you just do it and just march right along. And if you don't once think of, well, why are they telling me this, or start asking questions, well, what is investing, then you're just in the blue pill. And thus that's the reason why for these podcasts is we're trying to red pill you and show you guys the truth on this.
absolutely, absolutely. No, it's just really cool to see because I've I have conversations with some of the people who listen to the show, um and it's just I remember reading Rich Dad Poor Dad and just the anger. I remember even sharing it with friends, and they were angry because they had never been taught this stuff, right?
Right.
I mean, at a really simple summary for those of you who might not have read it, right? The part that was most, I guess, enlightening for me was just that simple part where it says, hey, you go out and you work, and that's your earned income. And you're supposed to, most of us, what we do is we take that earned income and we buy our lifestyle. We pay for our house, we pay for our car.
Right.
And say, oh no, instead, consider this. People take their earned income and instead of buying liabilities or things to live their lives, they buy assets. And those assets will then produce passive income.
Yep.
And the goal should be to eventually get to the point that that passive income will pay for your entire lifestyle.
Yep.
And now you no longer have to go out and earn your income anymore.
Right.
Free at that point. And I had never been, no one told me that. And that's exciting. And you can do it. And it's
Yep.
it's attainable. And I've met people who've done it within a matter of 2 or 3 years. It's not a 30-year retirement plan anymore. You
Right.
can have a 4 or 5 year retirement.
Right.
That's awesome. You still have health and energy and vitality to go out and have an adventure and jump out of a plane and do whatever you want. So that's the kind of life
Love
I
it.
want to live.
Absolutely. Yeah. My main problem with the stock market is that the concept is great. You want to get ownership in companies, and that's what we're doing here. We have syndications. We want to have the ownership in the LLC, the company. The main difference is that when we, as in real estate syndicators and our partners, every quarter when there's income coming in from the asset, we distribute pro rata or based on the operating agreement, based on the agreements of what the investors get in cash flow, positive cash flow, each quarter. And it is based on the performance of that asset. Whereas on the stock market, Amazon, Google, Tesla, these companies are making billions and billions of dollars each quarter, and they're not distributing them back to the owners. It's just there's tiny little dividends every other type of stock, but in general, most stocks don't have dividends like that, and the cash on cash return is minimal or non-existent in the stock market.
Yeah, that's yeah. So the way that people make money, you're right. It's definitely just designed to be this long-term, someday kind of thing, right? And yeah, with real estate and some of these other syndications, you can have an investment that actually puts meaningful money into your
Right.
pocket this year, now, in a
Right.
quarter or whatever. And it's at a scale that's meaningful that it could actually.
Yeah.
One of the guys that I met a few weeks ago told the story of how he had done a few of these syndications. He was starting to grow, and he was able to help his parents retire,
Yep.
people who were not ready to retire. And what they did is they put their home equity, they pulled it out through through a home equity loan, and then they were able to invest it with him, and that was enough
Yep.
to retire, to stop working when they were not on a path to be able to ever retire.
It's awesome.
So
Yeah,
it's possible.
my second problem with the stock market is that the value of the stocks is based on emotions and a feeling, uh, instead of basic economics and basic demographics and job growth and economy. So like the price of Tesla stock or Apple or Google, they go up and down based on random headlines in the news. Whereas if we have a multifamily unit in a town, the price of the rent of those units is based on the demographics of that location of that submarket. So if jobs are moving into that submarket and there's new construction plant or like a new manufacturing plant or a new technology company moving in, those people are moving into that location, and no matter what happens on a headline across the country, Elon Musk making a tweet, that company is still moving there. The jobs are still moving there, and there's still going to be demand for each one of those multifamily units. And so the value of my investment isn't going up and down based on news and people's tweets. It's based on actual market data and actual economy, and that it's so less volatile than the global market. So those are my two reasons why I say screw the stock market.
Yeah, it's just a very um especially I think your point. I remember hearing, I think it was Snapchat, if I remember. Some of these companies get valued at billions of dollars. They've never made a profit, right? It's just theory. It's just some of them are operating at losses of investor money, and it's just maybe projections or hype or celebrity CEOs that are so cool, and you see all these horror stories sometimes. I mean, what was this the F was it FTX, right? Where
Yeah.
there's stuff like that where there's
Yep.
just kind of these celebrity charismatic CEOs, and at the end of the day we don't know what's happening day to day. And so um there is something to be said to be able to invest in something that's tangible and something that is, I mean, there's statistics about just the overwhelming undersupply of housing
Right.
across the United States, and this will obviously vary from market to market. But housing, and I'll say I've invested in affordable housing, right? And there is a drastic undersupply. New construction is very rare for new construction to be built that is affordable housing. Most new builders are building luxury high-end housing.
Right.
So there's pretty much not going to be new supply anytime soon.
Right.
And so there's just all these reasons why I like this place, this space to invest. But more than any of those specifics, I think for me, it's just take ownership, right? It's
Right.
really know what you're investing in, and yeah, if you, like I said, like this person that I had talked about, who felt their self-worth going up and down based on random news articles or
Right.
again, a celebrity CEO. I just think it's just an empowering idea that you
Yep.
can take control and you can have that passive income and you can make smart investments. And not only that, but you have more power to select the type of investments that you want, for
Right.
example, according to your own needs. So
Right.
I've had, for example, that doctor, right? He makes a great income. He doesn't need the cash flow right away. So he actually prefers long-term investments on things that just maybe safer bets to grow over the long term. And the cash flow isn't very exciting to him anyway. So
Right.
great, you can design it around your own needs.
Right.
And there's just nothing more powerful than taking ownership and really feeling like I'm designing this for my needs and what I want.
Right.
So
Yeah. Another point, going back to what you said about FTX, that's another. It's another reason why I say screw the stock market. That obviously that was crypto, but it's the same horror stories happen in the stock market, meaning the value goes down to nothing. Whereas in real estate, the land is still there. There's still a building there. There's still tenants in the there's still rent coming in. So even if there's a downturn in the economy and the value of the multifamily unit, um, let's say it plummets by like 20%. Well, you still have tenants in there paying rent. You still have money coming in, and you still, at the end of the day, still have that structure there that is inherently worth something. And I think what the worst thing that could happen is that there's a fire in the building gets destroyed, but we have insurance. So for downside protection, that's the third reason why I say screw the stock market. There is no downside protection. Real estate there is. In there, it's very tough to go negative in real estate. It is what it is. And I've had multifamily units where I've sold for less than what I purchased for it, and I purchased multifamily in 2007 before 2008. And so in 2008, 2009 went down. So I ended up selling in 2011, 12. So I sold for a loss, but I still had an incredible ROI because that whole time I was bringing in cash flow. So at the end of the day, it was still a profitable endeavor, even though we sold for less than we bought it for.
how beautiful. That's it. That's a great um, example. That's
Yeah.
something that for a lot of people, especially I think from that stock market mindset, you're just taught buy low, sell high. Otherwise, lost, right? A really cool example.
Yep.
Um, yeah, I just think I'm a big believer in it, and I think for me, one of the funniest guests that we had on our show, that, like I mentioned, he actually was a stock guy, but he spent more time than anyone talking about why he he still resonated with our message, and there was this distrust of that system that teaches us to just kind of put our money away and forget about it. That's really the big message, you know.
Right. Right.
Um,
Excellent. All right,
so
Alex. So any final thoughts? Any final advice for our listeners that are wanting to get in, wanting to screw the stock market, and they're just kind of like, should I? Should I? I guess final thoughts.
yeah, sure. I think, you know, for most people, one of the first questions they have is the structure, which we talked a little bit about. The next question is often, what is the minimum investment? And so for the one that I've seen as kind of the minimum investment for most of the deals that I've seen has been 50,000. Some will go up to 100. I've even seen some at 250,000. So those are not small amounts of money. And so when it comes to comparing apples to oranges with the stock market, it takes a little bit of money. So I definitely encourage people, if you're looking at syndication, compare compare it to buying a single family real estate deal. And that's where some of those pros and cons will start to
Right.
weigh for
Right.
you
Exactly.
as a decision. So if time is a real challenge, then maybe, because I don't think you could probably, in most places you probably can't invest in a single family home for less than 50,000 bucks.
Right.
You're going to take
Exactly.
some money to buy it, to
Right.
acquire it, some closing costs, maybe rehabs and stuff like that. But at that point you're comparing kind of similar amounts, and then there's the advantages of bringing on a professional team and their expertise and their skills and the time that you will be
Right.
saving by not having to be overseeing the day-to-day management of the deal. And so I totally, like I said before, I do respect the people who say I want to be in control. But the last thing I'll mention is that for your audience in particular, we've created a landing page at screwthestockmarket.com/WBS, and there we're going to have a report to compare and contrast stocks versus real estate through these
Excellent.
syndications.
Excellent.
And so, yeah, we definitely hope that it'll be of value to anyone in the audience who's just kind of curious about this. And we're very much just focused on education, like you said before, just helping people to make their own best decisions about what they want to do and what they want to get out of their
Excellent. All
investment.
right. So where else can they find? So, say the URL one more time, and then say where else the listeners can find you.
Sure. Through the stockmarket.com/WBS. So that'll be the page just for your listeners. If you go there, you'll be able to find our other links to our podcast. Again, we are on all the platforms wherever you might be listening to podcasts, including YouTube. We have an Instagram at Screw the Stock Market Show. And I'm available on LinkedIn also under Alex Escobar, RE.
Excellent. Well, thank you so much, Alex. It was a pleasure having you on our show. This is excellent content, and definitely want to have you back on in the future. And that's a wrap for this latest episode of not Screw the Stock Market, but kind of. This one is not so, this one's more PG, wealth building strategies. So thanks again for listening. And until the next time, I'm your host, Chairman Constantino.